What's going on, everyone? Charlie here. Good morning. Hope you're having a great old day. I'm going to be talking about SRC2 2021-016. This is a new filing out of CBOE. It is to amend Rule 5.34 related to duplicate orders and risk protection. Now, the exchange proposes to amend this risk setting to eliminate the time parameter. Particularly, as amended, the system will continue to check for a specified number of duplicate orders, which will continue to be determined by the user, but no longer check to see if any such duplicate order were received over a specified period of time. Instead, the system will compare each submitted order against the immediately preceding order that was submitted with respect to the order's EFID, side, price, quantity, and class. The exchange proposes to modify the optional duplicate order protection risk limit setting for users in Rule 5.34, Section C, Paragraph 9. Duplicate order protection is voluntary functionality, as everything is in this market, which was designed to protect users against execution of multiple identical orders that may have been erroneously entered. Specifically, pursuant to current Rule 5.34C9, if a user enables this functionality for a port, then after the system receives a specified number of duplicate orders with the same EFID, side, price, quantity, and class within a specified time period, the user determines the number and length of the time period. The system will, number one, reject additional duplicate orders until it receives instructions from the user to reset this control, or reject all incoming orders submitted through that port for that EFID until the user contacts the trade desk to request it reset this control. The user may continue to submit cancel requests prior to reset. Now, an example. Suppose a user sets the duplicative order count to 10 orders. When the system receives an incoming order, the system checks if the immediately preceding order it received had the same EFID, side, price, quantity, and class. If the order does not, then the system keeps the count at 0 and performs the same process for the next incoming order. If the order does, the system will count that order as 1. If the following incoming orders through that port are also duplicates, or I'm sorry, if the following 9 orders, so the first order will be counted as 1 if it does not receive an incoming order. So if there's no duplicates with the same EFID, side, price, quantity, and class, the system will count that order as 1. If the following 9 incoming orders through that port are also duplicates, for example, it has the same EFID, side, price, quantity, and class, then regardless of how long it takes for such orders to come into the system will, number one, reject any additional duplicate orders until it receives a reset instruction from the user, and 2, reject all incoming orders submitted through that port for the EFID until the user contacts the trade desk to request it reset this control as it does today. So the main change here is that before, it would reject additional duplicate orders until it receives instructions from the user, and now we are reject any additional duplicate orders until it receives a reset instruction from the user. In essence, the exchange has observed that the time parameter check under the current duplicate order protection feature can potentially create a latency impact for users who opt to use the functionality. More specifically, minor latency can arise in connection with the specified time parameter because the system must store and conduct a check across all orders sent during the specified time period when this risk check is enabled. The exchange believes removing the time parameter check will eliminate this latency for users that opt to use the duplicate order protection, and the exchange does not believe that the proposed rule change will impact the effectiveness of the duplicate order protection feature for those users that opt to enable such functionality. Also, as noted above, the use of the risk limit is voluntary, as is everything else in the market. The exchange will continue to offer users a full suite of additional price protection mechanisms and risk controls which the exchange believes sufficiently mitigate risks associated with users entering orders and quotes at unintended prices, GameStop, AMC, and risks associated with orders and quotes trading at prices that are extreme and potentially erroneous as a likely result of human or potential error or maybe, the MOAS. Anyways, that's what I have for you. They're basically changing up their risk parameters just in case someone happens to enter in some duplicate quotes on an unintended price or a extreme price. Anyways, have a good one.